Some experts are warning that early signs of a possible housing market crash are looming. Though no one is certain, it's important for investors to know how to protect themselves from such an event. This video will go over the basics of a housing crash and how one can prepare themselves should it hit in 2022. So let's start with what a housing market crash means. A real estate market crash happens when the prices of homes drop suddenly and significantly. When housing prices decline, it can negatively affect the entire economy, resulting in job losses and decreased consumer spending. That's why a housing crash can often lead to a recession. Next, let's look at what can cause a housing market to crash. There could be many different reasons for a housing crash, including a decrease in demand for homes, often caused by a recession or a change in demographics, an increase in the supply of homes, sometimes caused by overbuilding or foreclosures, high debt levels that can make it difficult for people to afford a home, and regulatory changes such as interest rates or stricter lending standards can also lead to a real estate market crash. Global factors such as a slowdown in the economy or a decline in oil prices. The most recent housing crash was in 2007 and 2008, causing what we call the Great Recession. It took many factors combined to cause the real estate market to crash like we saw 15 years ago. Some of the most notable reasons were the subprime mortgage crisis. This was when many homeowners who shouldn't have been given mortgages were given them anyway, and the housing market started to collapse as a result because people couldn't afford to pay off those mortgages. Another factor was the collapse of the housing bubble. Home prices increased at an unsustainable rate, and when they began to fail, it caused the housing market to collapse with it. A decrease in available credit also contributed. After the crash, banks stopped lending money as freely as they had before, making it difficult for people to buy homes and investment properties. Finally, the recession also played a major role. This was a global economic downturn that started in 2007 that contributed to the U.S. market crashing. But it's not just in more recent times that this has happened to real estate markets in the United States. The stock market crash of the 1930s also saw a housing collapse. The two often go hand in hand, it seems. There are several reasons for this. Firstly, when the stock market declines, people often lose their jobs and their income drops. This makes it harder for them to afford paying their mortgage payments. Second, the stock market can often affect the value of people's homes. This can also cause people to default on their mortgages, as many may not be able to sell their homes for as much as they owe on them. Finally, when a stock market crashes, it can lead to a decrease in consumer confidence. And that means people are less likely to buy houses as they don't want to lose risking all of their money in the process. So why are we even talking about a housing crash in 2022? The possibility of a recession in 2022 has been the topic of discussion recently, as several indicators have suggested one could be on the horizon. It's heavily debated, rightly so, because 3 of the 5 factors mentioned previously that may indicate a country could be headed toward this kind of situation have already come to fruition. Namely, decreased consumer spending and economic slowdown. There have been a series of stock market crashes in the past year, and global instability. It's impossible to predict with certainty whether or not there'll be a recession in the coming years. And of course, let's hope that there won't be. But I was speaking with one of my colleagues at Mashvisor last week, and we spoke of how it feels familiar right now. With all of the stuff going on in the world, I was 17 when the previous housing market crash happened in the early 2000s. But I recall a similar feeling now as to what kind of caused all the trouble last time. As a real estate investor, it's essential to be aware of the risks and take steps to protect yourself if one does occur. So next, let's talk about how to protect ourselves from a market crash if it comes. So let's recap. A housing market crash happens when prices of homes drop suddenly and significantly. A crash is caused by a decrease in demand for homes, an increase in supply of homes, high debt levels, regulatory changes, global factors, and instability. There was a housing crash in 2007, 2008, and one, of course, in the 1930s during the Great Depression. Some signs of a housing crash are seemingly present now.
As a real estate investor, it used to take me 3 months of research to find a property worth investing in. Then I found Mashvisor, a platform that helps investors make confident decisions within minutes. Start your free trial at mashvisor.com.
When it comes to protecting yourself from a recession or a housing market crash, there are a few things you can do to safeguard your investments and your finances. So here are a few tips. First of all, review your budget and make changes if necessary. If you're not prepared to tighten your belt during tough times, you could be in for a rough ride if the economy takes a turn for the worse. Make sure you have a realistic budget in place that will allow you to live within your means, even if your income drops or expenses increase. Moreover, stay liquid. During tough times, it's crucial to have access to cash so you can take advantage of opportunities as they arise. Keep at least 3 months' worth of living expenses in a savings account, or at least have it be easily accessible so you can cover your costs as needed. In addition, diversify your investments. Don't put all of your eggs in a single basket. If a stock market or the housing market dives, you don't want to lose everything you own. So spread your money out amongst different types of investments, such as stocks and bonds, real estate, and commodities. Also, keep an emergency fund. In addition to having cash available for opportunities that may arise, it's essential to have funds set aside for unexpected emergencies. Make sure you have at least 3 to 6 months worth of living expenses saved up if you lose your job or experience some kind of financial hardship. Furthermore, don't take on debt. This is probably one of the simplest and most effective ways to protect oneself from a housing market crash. Avoid taking on too much debt, especially if you're not confident you can afford to pay it back. If the economy takes a turn for the worse, your situation may worsen with it. Another important tip is to seek professional advice. If you're not sure what to do or how to protect yourself, seek out the professional financial advice from a qualified advisor. They can help you make informed decisions about your investment and give you peace of mind during difficult times. Meanwhile, make sure that you can afford your monthly mortgage payments. Even if the value of your home drops, just make sure you can cover them so you don't lose your home. Last but not least, do not overreact. Remember that even in a recession or housing market crash, there are always opportunities for those who are prepared and willing to take advantage of opportunities as they arise. Stay calm, don't make rash decisions that could end up costing you more in the long run. The best way to protect yourself from any potential financial hardship is to plan proactively. While there's no guarantee any of these steps will protect you from a recession or a housing market crash, they can help reduce your risk and allow you to ride out the tough times more comfortably. Implementing one or more of these tips may help safeguard your finances and real estate assets and enable you to sleep a little easier at night. So stay positive, stay informed, stay disciplined, and you'll be able to ride out the storm. Thanks for watching. If you like this content, please like, subscribe, and hit the bell icon. We post videos on real estate and real estate investing every Monday and Thursday. Also, to learn more about Mashvisor and how we help beginning investors make smart investment decisions, check out the site by clicking on the links in the description.